Hello, everybody. So I want to celebrate the good news of the end of the day, which is that Stretch is trading back to 100. Stretch, of course, is the iPhone moment for MSTR, and it is a good news. And also, if I look at the price action of MSTR common stock compared to IBIT, you can see we should have been down only 2.6%, 2.7%-ish, perhaps a little more in after hours now that Bitcoin is dropping. As always, I mean, Wednesdays and Thursdays, it seems to be a pattern now. New pattern, I don't know, new pattern unlocked. But the point is, we're dropping a little more than we should have. And we're back to a MNAV of 1.17. So that's a slight drop. Why could that be? Well, we are done with the quiet period. We're done with the earnings. I think it could be the common ATM. The common ATM could be going on hard right now. That would be a wonderful thing if it was using the common ATM to buy more Bitcoin, as I see Bitcoin trading at 66,900 or something like that on my screen. So this is a good deal for him. Of course, today we celebrate Stretch. So Stretch is back at 100. It took, I mean, it's roughly what I said, right? It took an extra day, I suppose. I had said yesterday, end of day, it would get there. Well, I guess it's today, end of day. Of course, we didn't anticipate kind of the FUD going on with the rates and all the madness of this morning in the market. Yeah, we ended up trading up to 100.02. So that means the ATM, as far as I'm concerned, the ATM is back on Stretch. This is the iPhone moment. Saylor seems to be done with his advertising competition. You may remember he offered access to Strategy World, like free tickets to Strategy World for whoever made the greatest ads. I'm wondering if this is one of the winners. I'm wondering if there's going to be more ads. Are we going to have more ads for Stretch circulating online? This is a pretty good one. Talking to, playing music from like the 80s or the 70s, probably talking to a yield-seeking crowd. I like it quite a bit, using guitar, using amp. I think it does its job, and it targets its audience pretty well. So hopefully this goes viral. Hopefully Saylor ends up maybe tweeting a video a day, making it more viral and more conducive to transmission of the internet. Of course, this is a very happy moment for Stretch. Lots of people in my comment section talking about buying the dip on Stretch and selling it back when it reaches back to 100. Yes, it's true that this creates arbitrage opportunities because this stock is designed to trade at $100. And we know there's some bumpiness in the middle of the month where it goes ex-dividend, and I wouldn't play that. Because it would go ex-dividend, it drops by about the price of the monthly dividend, so that's not really arbitrage. But if you believe in the asset, some wise traders, because let's face it, this is trading, I've gone through this back of a napkin math. In fact, we've been trading near 100 for a few times. But it seems like every other month we seem to decouple. And you can see each time is 94, 94, 94. We seem to decouple from the stock price every other month, perhaps even more than once a month. But let's just be conservative and assume that there's a little panic on Stretch every 2 months. And every 2 months we drop from 100 to 94. Well, what if we do 6 times a year and every time it drops to 94 you buy? Well, that would be a 6% return in a matter of days. We saw that took like 4 days or 3 to 4 days it took us to recover to 100 after it dropped to 94. So if you add these dislocation events, that's how I'm going to call them, like dislocation due to fear or due to panic selling to go into other assets that drop even more, and if you take advantage of each of them, and let's assume you do that 6.5% return 6 times in a row, you turn $94 into 136. That'd be a return of 44% in 1 year, much higher than 11%. But of course, this would be taxed. You would be taxed each round. You would have psychology that goes into it, because every time if you buy, what if you drop at 92 when you're buying at 92, but you see the entire internet is calling for Bitcoin 30,000? Do you have the guts to do it? Or do you have low conviction? I guess is the idea. It's a trader's book. It's a trader's play. I wouldn't do it. I wouldn't do any of the preferreds but Strike. I like Strike the best. I think Strike keeps a lot of upside in strategy shares. So if I were to do a preferred, it would be a Strike. But would I do it? No, I prefer the common. Don't forget all of these strategies, whether it's Stretch or whether it's even Strike or Stride or Stream, they're designed to help the common harvest the additional volatility that is removed from an instrument like Stretch or like Strike. So it is by design. And let's conclude with Bitcoin. Let me just say the bears own Bitcoin right now. The sentiment is awful. We actually bounced back a little bit. We're at 5 extreme fear. We're at 9 extreme fear. So believe it or not, as we're below 67,000, we bounced back a little bit, but barely. And I would argue the bears own Bitcoin, but the bears also literally any sort of growth stock, any sort of growthy stock, any sort of high growth stories, the bears own it. So as someone told me on Patreon, let them have their short-term moment. You go bears, go make a little money in the short term. As a long-term investor, this should not faze you. This definitely doesn't faze me. And one last conclusion, I want to talk about Bitcoin, of course. Like I said, $66,000 to $67,000 Bitcoin right now. And why is that? Price makes the narrative. Price precedes the narrative. Now everybody's negative because the price is in the mid-60s. But those people who are complaining and being bearish right now, keep in mind they're calling for a price of Bitcoin in the 50s and in the 40s. But if we were to ever get to the 40s or the 50s, these same people will claim that the price will go to 15. And if we were to ever get to 15, they will claim the price will go to 4,000. Right? This is a pattern. This is always the same. For engagement forming, you gotta have a scary headline, right? So we're sitting at 66,000. You gotta make it scary. You gotta show 40,000 and make it scary and do some engagement farming, get some clicks, get some ad revenue on X. This is how most people do it. And keep in mind, they use technical analysis, but as far as I'm concerned, technical analysis has thoroughly failed in predicting anything related to Bitcoin. And keep in mind, you take a chart, you just change the scale, you just change the timeline, and you can make really any chart fit any kind of TA technique. And so from that standpoint, as far as I'm concerned with Bitcoin, it's all about the money flows. It's all about the money, and the money is not really flowing it into any risk asset right now. The money is not flowing into risky assets right now. I really don't know where the money is flowing in. Cash. People are sitting in cash. This is in Procter and Gamble and AT&T and Coca-Cola. These stocks were up today. Old world stocks are up. Old stuff is up. Makes absolutely no sense. As long-term investors, we're very much used to this. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.